Good morning, Trinidad and Tobago, and welcome once again to the Bourse Report. Apologies for the delayed coverage today because of other exigencies, but I think what we want to cover today is that frightful word, recession. That has come frontally to the lips of all persons in Trinidad and Tobago. What does it mean for you as an investor, and how do you go forward in a period of increased volatility, economic decline? Let's talk about what has been happening outside there and what it means for you as an investor. Of course, you can invest locally in TT dollars, and you can invest internationally through hard currency US dollars. How do you go about it at a time when recessionary forces surround you? Well, first of all, you need to eke out the best benefits of your savings as an investor. You need to focus on where you can get incremental benefits overall. And today I'm going to talk about the equity situation internationally for you as an investor, one, and make a comparison with what's happening with India, China, and then thirdly, have a quick look at energy prices and what it all means for you. First of all, when we look at the international markets in terms of equity, we see a picture which is one of negative returns generally to flat returns overall. Look at the first graph, and what you would see is that across the region, across the world rather, what you are seeing is decline across the board. Asia ex-Japan, negative 9.8%. The US, a rally in the last week has brought the US index up 2%. It's the only major index that is up or flat, as we would say. Latin America, down 28%, all of this in US dollar terms. Europe, down 3%. Africa, down 19%. And the Middle East, down 14%. It has been annus horribilis as far as equity markets are concerned. And as you come back, basically what has happened is the decline in oil price, one, the slowdown in China, the softening of commodity prices, all of these have contributed significantly to the equity markets and the downturn in the equity markets. For those who have not been in that market, it is a good entry point, or a good entry point may develop in the year ahead for you to get in at the low end of the market and seek to get benefits. For those who have already been in the market, it's a tough time because valuations which you would have placed in the equity market would have fallen somewhat in this year. And the story is one of energy prices, with OPEC having decided to maintain output. There is the specter of continued softening in oil prices, which will affect us in Trinidad and Tobago even further and could tighten the recessionary conditions which we face at this point in time. So let's look now at the second graph which I wanted to put before you. The slowing down of China, what it means, and what it means with regard to the India story. Many would recall at the beginning of the year, China markets rallied quite significantly, and the market was up by as much as 42 to 43% somewhere in May. And that also very quickly fell away precipitously with the news coming out of China as to a slowdown with steel production falling, with prices generally falling across the board. So you would see now that the market is just up about 3%. Compare that with what has happened to India. India is supposed to be the bright spot of the world at this point in time, with growth in excess or in the order of about 7%. However, that has not been reflected in the market, as you would see. The market went up to about 8 or 9% and has been underwater in the last several months, down about 9% overall. These are the factors that are surrounding us as we think about investment. What's happening in energy? And when we look at energy prices, which when you turn to the third graph, what you would see is a story of continued deterioration in terms of energy prices. the one that we look at is WTI, which is the blue line, and you would see it was have fallen considerably, some 25% since the beginning of the year, with very few prospects for a significant increase in the very short term. What are you to do as an investor? In the first place, many investors who have gone into international markets as we come back have done exceptionally well in a buy and hold strategy for international bonds. These strategies have produced returns for investors in the order of about 5%. And it looks as something of a safe haven if you go into what we call investment grade emerging market bonds. It provides a safe haven and a reasonable return in the order, as I said, of about 5% as you go forward, especially if you have a buy and hold to maturity perspective. That's one area to go into. In the international space as well, investors would do well to shift from US dollar, local US dollar bank deposits into money market funds, where you are going to get an uptick from, let's say, 1/4% up to a higher rates in the order of 1% to 1.25%, depending on who you go with. Look to those two starting points internationally, and we'll talk a little bit more about the local market and what you can do as you go along in the year ahead. Have yourself a wonderful investment week. Look for more details of this report at boursinvestment.com on our website, and look for our mutual fund prices on page 10 of the Express as well as on our website. Have a wonderful investment week. This is Subhash Ramkilawan for the Bourse Report.